guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great and amazing day today. Now in today's video, we are diving in and looking at IPOs. We're going to be talking about why I don't and why I will never buy an IPO. So I hope you guys all enjoy it. If you guys get anything in value out of this video, hit that like button. Actually, smash it right now. Smash that like button and subscribe. Do it right now. So guys, I hope you guys all enjoy it. And guys, don't forget to check out my merch as well. But let's dive into this one. Let's go. Now, for those of you that don't know what an IPO is, an IPO stands for an initial public offering. Now, what this means and why companies do it, it's actually really simple. Companies prefer to do an IPO because this allows the public to invest inside the company. Now, companies that are private, they're limited on the amount of investors they can have because you have to be an accredited investor, and most of the time you have to have a minimum account or minimum net worth of about $25,000 to be able to invest into private companies. Now, IPOs, you can buy and invest in it with as little as like $1 if you're using Robinhood. Now, the companies absolutely love IPOs. The reason why is because they're getting investors money that they can use to invest inside the business to grow it larger. In simple terms, that's what an IPO is and why companies love them. But now let's talk about why I personally will never invest in one. It's actually really simple. A lot of people love to freak out about this, but hey, I look at history. The reason why is because history tends to repeat itself. Now, looking at 100 IPOs, statistically, on average, 80% of all IPOs fail. They're unprofitable. You never hear about the company, and the companies sell off and, go into never talked about ever again. Now, yes, there is 20% that are profitable and will grow in value. But if you buy 100, you're only successful on 20. That's a terrible risk and reward. As an investor, as a long-term investor, personally, I would never invest with those odds. Not to mention, looking at these so-called hyped up IPOs that everybody says this is going to be the next thing. Looking at one of the most recent ones, ARM, which is a tech AI software company. Now, everybody was buying this thing up on the IPO day because that's what tends to happen is IPO stocks have an IPO breakout. They explode up and then people realize, what am I buying? And then they get absolutely annihilated, or all the people that had shares sell their shares because they're profitable and they're up 20% and they're now like millionaires. But anyways, in general, IPOs, they get a ton of buying pressure and then they just get absolutely annihilated. Just like ARM did, that software company I was just talking about. Looking at the chart, in the past 5 days, they are down 11% from their IPO, which is not very good. Not very good at all. Now let's look at one of the more popular ones in 2019, Uber. Yes, Uber. The so-called, this is the next thing, the next big thing. Everybody was talking about this IPO. And let me tell you, if you guys invested $500 into Uber at the IPO, you'd only have $461 right now. So you'd be down about $40, which is not very good, because if you would have taken that $500 and just invested it into the S&P 500, you would be up, probably around 40% or so, which is incredible. So personally, I always look at IPOs as a high risk, high reward play. I'm not going to say that I've never bought them because I have bought IPOs. I bought NEO, I traded NEO. But in general, they're incredibly risky because yes, we've seen some of these IPOs get a ton of buying pressure and then just annihilated. Another prime example, Coinbase got a ton of buying pressure and then just got annihilated. So for me, I just think that anytime you invest in an IPO, it's a high risk, high reward play. And as a beginner, if you're a beginner, I would rather see you guys just dollar cost average the S&P 500. A lot of people love to find these next Teslas, the next Apple, the next Google. But in general, it's always better to just invest into something that will grow, like the S&P 500, which on average gets about a 10% return. It's literally the biggest money hack. Just invest in the S&P. Hedge funds can't even beat it. It's a staple for the stock market, and yet People would rather lose their money on trying to find the next Apple rather than just get slow growth. Nobody wants to make money slow. It's crazy. Everybody wants this get rich quick, get rich quick. So guys, in general, my recommendations, if you're looking to invest into IPOs, just understand it's a super, super high risk, high reward play. And if you're gonna do it, my recommendation, keep it under 5% of your portfolio. Meaning for every $100 you have invested into like the S&P, the Dow Jones, maybe even some blue chip stocks or dividend stocks, I get putting $5 for every $100 you have into some super high risk growth stocks, especially if you're young like me. But in general, understand IPOs incredibly risky. Out of 100, remember, on average, 80% fail before you guys invest in that next one. So guys, we'll see you guys later. Remember to stay happy, stay positive, and we'll see you guys tomorrow. Take care.